Stop the presses, sound the alarms, alert your mortgage broker and text your ex. The OCR has dropped a whole 0.25. We did it, folks. Champagne for everyone, rates saved, the market's fixed, and your house just gained 50 grand overnight. Except, no, not quite. The popular Mike Jones, BNZ chief economist, is here. A man who can break down economic trends like he's reading your horoscope. Because while the Reserve Bank just trimmed the OCR, there's a hell of a lot going on beneath the hood of this economy.
Financial freedom faster. Financial freedom faster.
Just a reminder, every video here gives you an advantage in the property game. If you own property, want to own property, or just like the idea of financial freedom faster, subscribing is the easiest, smartest decision you'll make today. Mike, is the Reserve Bank actually fixing the economy or just buying time with scissors and duct tape?
Well, I think it's a case of, maybe a Band-Aid at the moment. Obviously, the big news of the past week is we're in a full-blown trade war. We've got tariffs applied to most countries. We're in some of that. We're getting some applied on New Zealand. The global growth implications are potentially big. So what we saw from the Reserve Bank today was here's another 0.25 percentage point cut, as just about everyone expected. But what we got in the guidance was perhaps a bit more material, which was the bank saying essentially, look, we're going to keep cutting here until we've done enough to try and offset some of these negative impacts that might be coming through. So they're going to respond as they need to do, keep their powder dry, but very much signaled that there's more to go on lower interest rates.
Why is my bank still ghosting me on lower rates even though the OCR dropped?
Well, your interest rates coming down, and we're seeing that in the markets. I think we're seeing now, financial market pricing has moved to expect a sub 3% official cash rate. I mean, that was kind of a knee-jerk response after we got Trump's announcement last week. But the important thing is that seems to be sustained. Now, that's a view we've had at BNZ for 2 years now. We thought the official cash rate would have to go sub 3%. The market never really priced it. Other economists were generally above 3%. But what we're seeing now is that whole complex move down, which probably means we're going to see, we think, some further trimming of mortgage rates over the next few weeks and months.
How does a 0.25% cut help when people are still paying 6.5% on their mortgage?
Yeah, well, what we're seeing is people continuing to roll off fixed rates and go into floating rates. I mean, that still seems to be quite a popular strategy. If we look at the numbers out of the Reserve Bank, I think just under half of all borrowing done in February was on floating rates. And so people themselves have got their powder dry. They're watching and waiting. I think, we are going to see some of those fixed rates, particularly shorter term fixed mortgage rates, fall. So people are going to have the option to roll onto those lower rates. I mean, we ran the numbers in a note I put out yesterday that basically said, that there is a big old cash flow positive coming through this year from that mortgage rate refixing. We haven't actually seen, from a whole of economy perspective, much of that come through just yet because people have been generally rolling onto those floating rates just waiting. But it's about $2 billion worth of positive cash flow. It's going to come through over the next 6 months. That's about 0.5% of GDP. So it's a big boost at a time when we probably need it.
Just a reminder, property investing isn't for people who sit on the sidelines. It's for people who take action. And the first step, subscribing to the fastest growing investor channel in New Zealand so you're always one step ahead of the market. Mike, lots of Kiwis have floating mortgages. Is it silly waiting for another rate cut?
Well, I think if you look at what the Reserve Bank said today at face value, I mean, there doesn't seem to be any rush because the Reserve Bank said it's going to keep cutting rates. They never sort of give you a hard signal as to how much, but clearly the flexibility is there. The OCR is at 3.5% now as of today, let's not forget, and that's still in restrictive territory. We have to go all the way below 3 before we actually start boosting the economy. So there's quite a ways that they can cut further, and we think they will. So that's one advantage of being where we are in terms of the cycle, the interest rate cycle, is that there is the ability to push a bit more stimulus out there, and the bank was pretty explicit about that today. They're in a good spot, they think, to respond.
OCR's down, inflation's flat, confidence dying. Is this the financial version of CPR?
Well, I don't think the patient is out for the count just yet, but probably it's taken a bit longer to recover. I think there was probably some hopes out there. We had the survive till 25 mantra that would turn up this year and would be back to full health, but it hasn't happened. It probably never was going to happen. And so, that's why we've had the interest rate view that we've had. We always thought you'd need to get the cash rate down to below neutral to actually give that boost to the economy. And now the odds are looking more likely that that's where we'll end up.
Did the Reserve Bank react to the tariff situation? Do they see a recession or trade war coming?
Yeah, I think what they did today was the right call. Cut 0.25, don't do anything to scare the horses. There was some talk that they might do a bigger 50-point cut, and that may have just given people a fright that they perhaps didn't need. So cut 25 and then just say to the market, hey, we don't really know where this all ends, this trade war, nor does anyone else for that matter. So we've got room to cut rates further. That's probably what we're going to do, but we're going to wait and see what happens as to how much. So I think that's about all they could have done today, and that's what they did.
If we go back a week or two ago, Mike, and I asked you about the OCR, where you thought it was going to end up by the end of the year, I'm guessing you would have said maybe around 3%. With the latest tariff announcements Trump's been making, some of the New Zealand commentators have been saying that we can get below 3% before the end of the year. Are you guys changing your outlook?
Well, look, I'll give us a wee plug here, and we were the ones saying below 3%. We've had 2.75% on the board for almost 2 years. That's when the consensus has generally been 3% or above. What we've seen since then is others have sort of come down. So we're still saying that. We're still saying 275. That's 3 more 25 basis point cuts. The new news for today is that now we're saying, well, actually, there is a risk that we could go even lower than that 275 that we've had on the board. We haven't said that before. It's been difficult enough to hold that view that we've had against some of the ebbs and flows in the data and the risks as they've moved around, but we've held on. Now we're saying, look, there's a chance you actually see a lower cash rate than 275, but and we're all kind of getting tired of economists saying this, but a lot of water to go under the bridge, a lot of volatility. We're looking at things day by day at the moment in terms of what sort of headlines we get served up when you wake up in the morning.
Thanks for your insights today on the OCR, Mike. Look forward to your next report, and do recommend that people have a look at your Eco Pulse report, and we'll link to it below. A final reminder, this is the fastest growing investment or property channel in New Zealand. Why? Because people who subscribe here are the ones making money while everyone else is still thinking about it. So hit that button before you get left in the dust.